Good morning. How to avoid a failed 1031 exchange. A 1031 exchange can be one of the most powerful wealth building tools available to commercial real estate investors when executed correctly. And when done wrong, however, it can trigger an unexpected tax bill, derail investment plans, and permanently damage long term portfolio growth. Now, each year, thousands of investors unintentionally fail their exchanges due to missed deadlines, financing missteps, or poor replacement property planning. And below is a practical guide, investor focused, to help you avoid the most common 1031 exchange failures and to protect your capital. Number one, understand the 45-day and the 180-day deadlines, and there are no exceptions. The most common cause of a failed 1031 exchange is a missing deadline. So once your relinquished property is closed, you have 45 calendar days to identify replacement properties in writing. Now you have 180 calendar days to close on one or more of those properties. And these timelines are strictly enforced by Internal Revenue Service, and there are no extensions for financing delays, inspection issues, or contract problems. So here's the strategy. Begin sourcing replacement properties before listing or closing your sale. 2, identify the right properties and enough of them. Many exchanges fail because investors only identify one property and that deal falls apart. So here's some best practice concepts. Identify multiple replacement properties, A, B, C, D, E, F. Use the 3 property rule or 200% rule strategically, but also confirm zoning, use, and income suitability early in the process. And waiting until day 40 to identify a property significantly increases failure risk. Number 3 is line up your financing before you sell. Another major exchange killer is financing risk, and replacement properties must be acquired with equal or greater debt than previous. And it must be an equal or greater purchase price. And you can have no reduction in equity or boot. And if financing falls through after identification, the exchange may fail entirely. So here's some strategy tips. Work with lenders who understand 1031 exchange timelines, DSCR requirements, and commercial underwriting standards before selling your property. 4 is use an experienced qualified intermediary or QI. And you cannot touch the proceeds from the sale, even briefly. Now, qualified intermediary is a third person that's basically going to get in the middle and hold your funds in escrow. They're going to prepare your exchange documentation, and they're going to coordinate deadlines and compliance for you. So the takeaway here is choosing an inexperienced or low-cost QI will also increase your operational and legal risk. So you get what you pay for. Number 5, avoid boot and structural mistakes. So even if you close on time, an exchange can partially fail due to excess cash returned to the investor, or debt reduction between properties, or if there's improper title vesting, or if you're buying a property in a different ownership structure. And these errors trigger taxable boot, defeating the purpose of the exchange. Number 6 is build a backup plan, always. And that's a good life piece of advice too. But experienced investors assume something will break in every step of the transaction. And some smart backup strategies can include identifying additional properties beyond the minimum, using flexible property types, so industrial or retail or medical or triple net leased investments. But coordinating brokerage and lending under one advisor strategy is a smart concept. And here's the final takeaway. A failed 1031 exchange is rarely caused by the market, and it's caused by poor coordination, late planning, and underestimating execution risk. And the most successful investors treat a 1031 exchange like a project and not a transaction. So early property identification, or capital and financing aligned in advance of your shopping. And having one integrated advisory team is advisable. Now, if you're considering a 1031 exchange, the best time to plan is before your property ever goes under contract. And that, my friends, is it for the day. Please visit my website, Houston Real Estate Brokerage, to figure out how to get a hold of me, and love to talk more about your scenario. Have a good day.